How is AI innovation going to change things for financial regulators? It's something, if you're not in the industry, you probably don't think about it a lot, but it's actually going to impact us a lot more than we think. And I'm excited to talk about that today on Everyday AI. This is your daily live stream podcast, free daily newsletter helping everyday people like you and me not just learn generative AI and what's going on, but how we can all leverage it and understand how it impacts our daily lives. So, if you're joining us live, as always, thank you for that. Make sure to get your questions in. We have a very special guest today that I'm excited to have on the show. If you're listening on the podcast, don't worry, you can always come in and join the conversation after the fact. Check out the show notes that we always include in the podcast. Come back, ask questions, interact after the fact. So let's get started today with the AI news, as we do every single day. Some big ones today. How competitive do you think talent is for top AI execs? Well, according to a recent report, we're talking pro athlete type money. According to a recent report from Insider, OpenAI is offering compensation packages of $5 to $10 million to entice top Google AI researchers. That was not a misprint. I did not miscommunicate that. That is true. $5 to $10 million compensation packages. So the company reportedly has already, OpenAI has reportedly already hired nearly 100 people away from Google and Meta. And job listings for OpenAI are showing salary ranges of anywhere from about $250,000 to $500,000 a year for research engineers with additional benefits and equity. When I read that, I was like, whoa, okay, that's like actually more than some pro athlete money. All right. Second piece of news for the day. Microsoft stock hit an all-time high late Friday as it prepares for its Ignite conference this week. So Microsoft stock reached an all-time high as the company prepares to announce some pretty exciting artificial intelligence announcements at a conference that starts actually tomorrow. The Ignite conference starts tomorrow in Seattle. So what are they supposed to announce? They've already started rolling out their Microsoft 365 Copilot, which kind of drops generative AI across the operating system. But it has been widely reported, but not confirmed, that Microsoft will unveil its own AI chip codenamed Athena. And Microsoft's reportedly new AI chip Athena will reduce their reliance on NVIDIA and give them a little more control over their AI infrastructure. So some pretty noteworthy things going on in the world of AI. But that's probably not why you're here. You probably tuned in live or are listening on the podcast because you care about AI innovation for financial regulators. So that's what we're going to talk about. And I'm extremely excited to have on the show. And please help me welcome. We have Kyle Hauptman, the vice chairman for the National Credit Union Administration. That's a government agency, y'all. So Kyle, thank you for joining us on the show.
Thank you, Jordan. I like listening to the news updates too.
Thank you. Yeah, big stuff happening. You know, I should have, as a kid, given up on my MBA dreams and just gone into generative AI earlier at the time. But
yeah,
Kyle,
I had MBA dreams too, but I didn't have to give them up. The world just gave them up for me. You know, I just didn't have the ability. But I use that expression too about NBA, NFL money sometimes when talking about the more complex and harsh a regulatory scheme is, the higher the market value for former regulators. So if regulators are doing their job well, there shouldn't be a massive market to pay to navigate the system. That means the system's not that good, right? Anyway, you mentioned the pro athlete money, and it was reminding me of that.
Oh yeah, same with me, Kyle. Something about I stopped growing in 8th grade didn't help.
Yeah.
But maybe tell us a little bit about your work at the National Credit Union Administration, just so people know, because it is confusing, but it's a government agency. So just give everyone a high level overview of that.
Short answer is, if you know what the FDIC is for banks, that is essentially what NCUA is for America's 4,600 credit unions. We are an insurer. If you have a bank account, if you have an account in a credit union, it's insured up to $250,000 per account, exactly the same as FDIC insurance. And we're also the regulator for about 2/3 of the credit unions. For about 1/3 of the credit unions in America, we are just their insurer, like FDIC is for banks. And then for 2/3, we are also their regulator.
So, and I'm not even sure of this. So I'm learning along live with everyone else, but how is the National Credit Union Association, or are you all using generative AI internally? Is that not, are there too many kind of, pieces of red tape to go through? I mean, how does that work in government agencies and using AI? Because it's obviously important, but there's a lot to regulate.
By the way, it's administration, not association.
Yes. Oh, sorry. Thank you.
But that's the thing, because there's a trade group that has similar letters, and people confuse it with that. I am a government employee, and so anyway, I mean, we're still in top of the first inning. If you don't follow baseball, that means the very beginning. But so I think the most obvious use for us as a regulator will be fraud detection. I know we're talking about it. I don't know as of yet today we've actually launched it. But either way, we're not going to talk that much about it. The same way that entities in general don't go into detail on their cyber defense and antivirus software. You don't tell people exactly what you're doing. But that'll be thing one. But quicker than us using it as a government agency are the entities that we regulate and insure, America's credit unions. They're already using it for a whole bunch of cool ways, including their own fraud detection, because that's a major issue for them.
Yeah. And obviously, in this, in the financial sector, some people know, some people don't, but AI is not exactly new. It's been used for many decades in the financial sector. But how does the generative AI aspect, and when you start talking about large language models and things of that nature, how does that change the game for financial regulators, just broadly speaking?
I think the main thing is credit unions and banks, for that matter, just have to do what they've always done, which is adapt. No credit union or bank in America can operate the way they did 30 years ago, which is no website, no online bill pay, no mobile app, right? Had you been frozen in time, or had your regulator made you frozen time, or didn't say you couldn't use this thing called the internet, but was really negative every time it came up, right? Well, those people would all be gone, and that regular insurer would be bad at their job. So I think you agree that ChatGPT last November 30, right? We're coming up on 12 months now. That was a game changer because, like you said, AI itself has existed for a while. I know the U.S. government uses it in a bunch of levels and probably tons of ways I don't know of. NSA uses it to monitor Al-Qaeda cells and see if there's any patterns predicting terrorist attacks, that kind of thing, AI. But normal people sitting at home, middle-class people and regular small businesses weren't using it because there wasn't a consumer useful front end. So ChatGPT all of a sudden for free was something to play around with that regular normal Americans can use on their phone or on their desktop. And it wasn't just, for the military and big business. This reminds me of the internet itself was around for a while. And you didn't have a front end, a browser, or even AOL, right? So that could tap into the power of it. Like the Pentagon had said, other people were using the internet, the actual piping. But then at some point in the 90s, it wasn't one day like ChatGPT. Mm-hmm. But this thing happened where we had front end browsers. We had our Netscape browser, or you had something like AOL, and all of a sudden, this technology that had been around for a while was now usable by everyday Americans and everybody around the world. And if you're old enough, you couldn't go a week without getting like 2 of those AOL discs in your
I remember those. Yeah.
But anyway, there's a front end, and now it's explosive. We're talking about it, right? Literally 1 year ago today, November 13th, 2022, I don't think we would have had this conversation the same way, because that was a bombshell, ChatGPT. And I played around with it, as a regulator. We write regs and we write guidance. That's all we do, right? And just to start, I just think anybody that has to write things, I just feel like it's eliminated writer's block. You can just say, all right, just spit something out and then hit refresh and try again. And you don't sit there with a blank Word doc. It's hard. How people procrastinate because they can't get started. For that matter, important emails. Like, okay, how do I start? What do I do here? I think it's super cool just internally. But I just threw a lot at you. Sorry, man.
No, I love it. Kyle, one thing you mentioned there that I want to dive a little bit deeper in is you kind of talked about the internet and kind of what that meant for the economy at large. So how do you think, even if we're talking about it from a US perspective, right?
Yeah.
How do you think that generative AI will impact the economy, and kind of drawing on that parallel of what what the internet did for the US economy? Is it going to be similar where generative AI is really driving the economy forward?
Yeah, I mean, I think, listen, all technology that's widespread, that is disruptive, it wouldn't be disruptive if it didn't have some negatives. But my view, policymaker, and before I was at NCUA, I worked at this in the U.S. Senate, the banking committee, and we had a broader purview there, right? So if I just put on my American hat here, we have the potential to dominate it. We have the potential to get all the negatives. I'm sorry, all the positives. We're going to get the negatives no matter what. Okay. Every new technology has negatives, and people say, "Oh, I'm worried." Yep. You probably should be worried, but what matters is how much of the upside we get. I always say, do you know there were 0 plane crashes before we had planes?
Good point. Yeah.
There were none. You can read the entire Old Testament, New Testament. There's not one auto crash. There's not one internet virus. And these are all negatives, right? We're going to get the negatives anyway. And there's not a whole lot you can do about it. The question is, how much upside do you get? And even the negatives can produce good jobs. For example, antivirus software. Everywhere in the world has to deal with internet viruses. Everyone in the world has to deal with cyber attacks. Hey, it'd be great if that didn't happen, but it does. But only some places in the world get paid for a high-paying cybersecurity industry and a high-paying antivirus software industry. So, with the internet, we captured the most upside. And I credit 1997, Bill Clinton, Al Gore. I think it was an important moment. They put 5 principles for this new thing called the internet on whitehouse.gov, a website that had only existed for 2 years. And it was from upon high, number 1, the private sector shall lead, et cetera. And listen, we got all negatives, right? We lost all of our video rental jobs and travel agents and all that, right? But guess what? Canadians and Mexicans also lost their video rental jobs, but they don't have Netflix headquarters, Hulu headquarters, the employees that got in early and got stock options and changed their life, the early investors that got huge returns, the endowment funds and pension funds that invested in those venture capital funds. The worst thing with disruption is to get the negative and not the positive. So I would like us to replicate our success with the internet, not try to think we know it all, and recognize that, yes, there's going to be negatives. And the question is how much upside, and Americans certainly in a position to capture more upside than any place else.
I love what you said there, Kyle, about yes, there were 0 plane crashes, when you go back, hundreds of years, right?
We went thousands of years without a single one.
Yeah. But I think even when you talk about kind of the general perception of AI, it does seem that there's this kind of overwhelmingly negative perception, but you just kind of likened it to the internet, right? So I'm curious from a financial regulation perspective, can you talk a little bit about the public perception of specifically generative AI? Are people excited about it? Do they not understand? Or are they saying exactly what you're saying? This is our internet moment to, as a country, leverage this technology and push our economy forward.
I think it's going to be like if you try to talk to, a 12-year-old or even somebody in high school right now, even the terms we use don't make any sense to them. Like, how do you return a movie to Netflix, right? Like, even the words, it's not like we got a cheaper deal and, rewind it before you, what do you mean? How do you rewind it? What are you talking about? Like, the terms don't even make any sense anymore. I think we agree that a lot of things are going to be like that, like just the way we speak about these things. And so there's already been AI credit unions, for example, online lending, right? Doing more advanced underwriting than just using your FICO score. Some really, really neat stuff. And that's already been happening. But the one advantage that I think AI has over another newish industry, blockchain, digital assets, crypto, is that regular people are going to use things like ChatGPT and make their life easier. So you can't just say it's all negative. You can say there's negative aspects. That was an advantage the internet had. your first White House staffers, et cetera, that have web page, and oh my gosh, email. I can hit a button and you get it across the country. You can read the news without having to go find a physical newspaper. Like, internet had problems. There's all kinds of crime on the internet. There's illegal pornography. There's all kinds of stuff. But you couldn't just say this thing is bad because you knew all these neat things, right? You were able to say, yes, cars get in accidents, but cars also get you to the hospital faster. People used to die before because they couldn't get there, right? So normal people saying, whoa, you know, it just did some draft paper for me and it created some art and it can be aware of state law in all 50 states 7 days a week, which comes up in my business a lot, right? Super friggin' useful. So the worry about it, yes. And to say we want to have responsible development, okay, yeah. But like, you know, the deep fakes and it's, again, like the internet, same problems, but more aggressive and more hardcore. Like false advertising was illegal before the internet. Fraud was illegal before the internet. Impersonation, stealing identities was illegal before the internet. The internet created whole new ways to do those things. And I think you agree, Jordan, AI is going to have lots of ways for criminals. It's going to create a whole bunch of new problems. But what do we know about problems that are really harsh and really expensive? We know you can get paid really well if you come to the table with solutions.
Yeah. Yeah. Geez. As we talked about at the top of the show, you know, we have these jobs now at, you know, OpenAI, you know, $250,000, $500,000.
Yeah.
You
And
know,
detecting when somebody calls, yeah, so, you know, like deep fakes, when somebody calls up and it is your voice, it really is with your accent and your intonation, and it can pass those voice detection. It can literally pass it. You know, you can speak to a relative and they think it's you. That's a major issue.
Yeah.
And people who can present solutions to that, those are going to be good jobs. Let me tell you that.
Yeah. It sounds like, you know, there's always been these positions that we've talked about, you know, in anti-fraud, cybersecurity, but
Yep.
Kyle, like even specifically as we talk about financial regulatory institutions, you know, credit unions, everything, are those jobs just going to like explode in popularity and in, you know, more and more, you know, credit unions needing these?
Well, I think we agree that we're going to look back like we do, like talking to that 12-year-old kid, right? They don't understand how much harder things used to be. That getting lost and taking the wrong turn and trying to figure out, people missed appointments, right? You didn't have this thing called GPS to try to communicate with people. You know, like when I call my wife from the grocery store and I say, see this thing in my hand right here? Is this what you want me to get? Right? And we don't have to have these screw ups. And trying to book travel, like just monumentally harder. So many things in a young person's life just were not possible. You know, when you say, oh yeah, I talked to Jordan this morning. Oh, you did? Okay. Really? When I was a kid, you had to physically be near a certain phone, not any phone, one certain phone, and you had to be on one end for us to, you know, to talk to each other. I think it's going to be like that. And you're going to wonder, oh man, remember the old days? That was a nightmare, right? I remember as a little kid going through the yellow pages, trying to look up airlines and then calling them each and waiting on, you know, do you fly to Denver? Yes. And writing it down. Friggin' nightmare. So there's no way I think we're going to look back at pre-AI and say, wow, that was better. The same way, you know, you don't want to just not have smartphones anymore and get rid of the internet. We wouldn't even know how to function.
Yeah. Yeah. Please don't take any of that away from me right now. Yeah. I don't.
Anybody that complains about innovation and it gets worried, I'm like, okay, lose your smartphone for a day. See what happens, right? It's a nightmare. We can't even function, right? And it's to me the same. So people are going to wish that there were aspects of AI that were gone. Yeah, that's true. We wish that there weren't internet viruses, that we could have internet without cyber attacks, without hacks. We wish we could, but from a policymaker perspective, we're going to have those things and we can't stop it. We can't. Everywhere in the world has car accidents. Only a few countries get a high-paying auto industry, and we're one of them, okay? And every country in the world has computer viruses and cyber attacks. Only some places have a good cyber defense, cybersecurity industry. So everywhere in the world is going to have negatives with AI. Everywhere in the world's financial institutions are going to have negatives with AI. Only some places are going to get all the benefit of it. And I think America certainly can be if we're not too heavy-handed on it. But credit unions use it for customer service. Do you know what's already solving language issues? Like, you have a new immigrant community, you know, like I live in DC, right? There's a large Ethiopian community. If I ran a credit union and I don't necessarily, and I want to have stuff in the language and speak to them, it just got so much easier. As you can imagine, last year I spent a fair bit of time talking to the Ukrainian American credit unions. There are 11 Ukrainian American credit unions. They told me 40% of their phone calls are in the Ukrainian language. Jordan, I'm sure you can understand, it's hard enough to find good customer service people. It's even harder to find ones that are fluent Ukrainian and English, right? So a lot of that just got easier, didn't it? Where you can actually speak and write documents and have chat bots that aren't terrible, you know. The opportunity to be served in the financial system, the opportunity to serve somebody, serve them well in the financial system, just got easier because all of our entities are now fluent in Ukrainian and Mandarin Chinese and everything. And I think it's great for financial inclusion.
Yeah, that's a great point because Kyle, we've kind of been focusing on how generative AI may help the industry or help credit unions, but I mean, when we talk down to the individuals, it sounds like it's going to make things a lot better for the individual, correct?
Yeah. In a free enterprise economy, in which we still, you know, thank God, largely are. Technology usually lifts up the have-nots and makes theirs. If you just add technology to a status sort of, you know, low free enterprise society, then it just enriches the elites. But in a society like ours, normally it helps the have-nots. For example, I've had 2 in my life deaf rideshare drivers, like Uber drivers. It's not a big deal. You get in, you put a sign, and if you know how rideshare works, you put in your destination, whatever. And for that matter, I've taken other countries where I don't speak the language, they don't speak English. I mean, it's the same thing. I've never had a deaf cab driver, and you can't even get a license. So somebody with a disability now has a way to earn their keep, and people are happier when they earn their success. Most people don't want to be, you know, very few people I think are actually moochers. The system may make you one, but people in wheelchairs, eBay, Meg Whitman used to always say this: how many people made their primary living buying and selling on eBay? Technology has always helped less fortunate. If you were deaf, there were a lot of jobs closed off to you, and you now have it. A taxi driver, you could never get a taxi license if you were deaf, right? It's made it so much easier, and it's made it easier for us to get around. The wealthy never had this problem. They had chauffeurs. The financial industry, right? How easy it is to access good investments now. You can get low-cost index funds sitting on the sofa just with your thumb on your phone. You got your paycheck, you want to invest, boom, you can do it. The wealthy always had concierge financial services. So this is going to allow people to do things. You might not have tons of very high-priced lawyers or be able to find one. And even if you do, they don't work 24 hours a day like AI does. And is aware of the latest developments. You know, I think it's going to be the same way that we're going to have services that only the elite had before. And it's going to benefit it on the service side. But if those of us in policy-making roles don't screw this up, we'll also get the other 2 benefits, the jobs and the investment. Everybody in the world gets to watch streaming media. Only some countries got the jobs and the investment that came with it, you know? So you could say that's a theme I keep coming back to. But this country obviously has an opportunity to just win and win big with the AI industry.
I love that. Yeah, that's getting me pumped up, right? Because we always talk about, hey, everyone can use it. It's creating so many new sectors, but yeah, those sectors and jobs for the most part are here largely, which Kyle is a great point to bring up. We could go on for a very long time, Kyle. I want to be respectful of your time, but let's maybe focus on what is the one key takeaway as we wrap up today's show that you want people to understand about how maybe credit unions, financial regulators are using generative AI and what that means for the rest of us, right? So what does it mean for us all? And what do you kind of see as the future of generative AI in this space, hopefully pushing this whole sector forward?
Well, again, to go back to the internet analogy, the core of traditional finance didn't change. How they did those things changed. The core of banking has not changed since it started in the Middle East thousands of years ago. People make some money, they deposit it, they withdraw some, that money is lent out. Most of the time it's paid back. That's the core of it right there. Okay. Money moving around, being lent out, being paid back, etc. That hasn't changed in a long time. How we do it has changed. So for a regular person out there, the two things that jump to mind, right? Put aside inside a credit union, but from a customer of a bank or a member of a credit union, your lending decisions are going to get a little more complex, but probably quicker. Meaning you don't just have to look at your credit score. People complain about FICO, and I understand it, but I've been in countries that don't have something like that, and believe me, FICO is better. But what you post on social media, depending on what they use, you're going to find lending risks that are better than people thought. Like finally being able to get credit for the fact that I've paid like 320 consecutive monthly cell phone bills since 1998, and I don't get any credit in my FICO score because it's not technically credit, right? The fact that I paid rent for 20 years, right? That kind of stuff too. But obviously, there can be negatives as well. You might look like you have good credit, but dig under it. So the lending decisions are going to get more complex, but better. Remember, we don't want to be in a country that misallocates credit. We had a version of that in 2008, the housing crisis. So more accurate, faster, but different. Who gets lent what money at what rate? Okay. So I think that will be a key one. The other thing will be customer service. You're going to be able to get forms in your language. You're going to get information that's up to date. So again, we regulate credit unions, in all 50 states, and many of them are state chartered, so they're regulators of state. I don't know what happened in Oklahoma this weekend. There was some enforcement case, right? But good AI, reg tech, should know. So customer service and lending decisions is what I would say for a regular person. That's where you're going to see the difference. You're going to get money at a certain rate, and for that matter, your money in the bank or credit union is going to be lent out in a certain way, in a different way, more complex, but probably faster and fairer than it used to be.
So many great insights. We covered so much in a very short period of time. Thank you so much, Kyle, for coming on the Everyday AI Show and giving us some great insights on AI innovation for financial regulators. Thank you so much for joining the show.
Thanks, Jordan.
Hey, and as a reminder, everyone, we did cover a lot. If you miss any, don't worry. Go to youreverydayai.com. Sign up for the free daily newsletter. We're going to be recapping today's show, sharing out a lot more information as we always do. So thank you for joining us, and we hope to see you back for another episode of Everyday AI. Thanks, y'all.